Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Wednesday, September 26, 2012. Well, a continuation of the trend to the downside in the first time frame today. A candle that's made a lower high and a lower low, and once again a black body candle where the sellers have maintained control of this market. Previously we saw the market break out to the downside below this flag type pattern that I highlighted. We saw the close down below, and the market has gone on with the effort to the downside and met the target. The target is generally with reversals of flags, the width of the pattern projected down from the breakout, and we've just about met that, which is around this support area. So it could be some quite strong support down around the area where the market has traded to the low, roughly around the 1430, 1429 level. In terms of the size of the black body, however, the sellers have lost a little bit of momentum, but still maintaining some strong momentum because the size of the black body is still rather large. But they haven't made as much net bearish progress as the sellers made on the previous day's trading, so that does suggest that there is potential for the market to find support around this area. But looking at where the market has closed within the range, obviously the sellers have closed with control, but they have lost some commitment down around that support area. Just something interesting worth looking at the moment is this trend channel that I've drawn. We draw the trend line first, and then we're able to draw a channel, and the channel line is drawn between the through the peak between the first two troughs that the trend line has drawn through, parallel to the trend line. And here we see that the market interacted with the channel line and was rejected from there. So we saw that candle where there was strong downside price rejection, a very large shadow on the top, and the market has been trending down since then, coinciding with that flag type pattern. So it did suggest that the market was ready for some sort of a retracement back towards equilibrium. Now the market is moving down towards the trend line, and the trend line will give us a good guide as to the momentum in the market. Trend line breaks we need to be aware of aren't trend breaks. Basically we draw trend lines to simply describe a trend, and in this case the trend that we're describing is between the trough here, the peak here, the trough here, and now the peak here. And if the market breaks down through that trend line there, it means that the buyers are actually losing momentum. That's all. It doesn't actually mean that we have a change of trend, because of the way that we define the trend. It's based on peaks and troughs, not based on a line that we draw through those peaks and troughs. So we still have a series of higher peaks and higher troughs in that larger time frame. But a break of that trend line to the downside will be significant, and it will mean that momentum has been lost. If we do see that break down below, then we do have strong support at the 1400 round number, and very, very strong support below there, because we have the cloud trading down below there. So that will offer very, very strong support for this market. Now in terms of the Fibonacci extension, and here we're still looking at the current first time frame downtrend and the relationship of that to the previous time the market was trending down, and here we see the market trading down towards the 261.8% level, which is at 1427, just below the area where the market has found support. So there is a strong likelihood that we could see the market bounce back here and the buyers come into the market based on that, and the fact that we have strong support at this minor swing low around the 1429 level. In terms of the Fibonacci retracement of the prior uptrend, we're in an expansive phase of that. Previous day's trading, the market tested almost to the 161.8%. We've taken that out today in a bearish manner, and we do have a target down at the 261.8% at 1422. So it's down below this previous swing high, and but it's within a zone of previous resistance, and it could be significant if the market does test down below where we're trading at the moment. If we do see strong upside price rejection from there and a bullish candle come into the market, then that would be a good sign of a change of trend, if we don't have a change of trend prior to that. In terms of Ichimoku, we have a bullish market in the long-term time frame by trading up above the cloud, but the market has now turned bearish in the medium term and the fast-term time frame. We're trading below the Kijun Sen. We had a flat Kijun Sen, price action was attracted back towards there, and now we've had a close down below there. So there is a possibility the market may go on with this move and trade lower. 2 days ago, we had the bearish close down below the Tenkan Sen. It did suggest that there was quite a strong change of sentiment in the market, because it had been some time since we'd seen the market trading below the Tenkan Sen, and that made that quite significant. So a significant change in sentiment towards the sellers in this market at the moment. So moving forward, we have the market retracing back towards the equilibrium offered by the cloud in the longer term time frame. We do have some strong areas of support around where the market's trading at the moment, so there is a possibility of a change of trend back to the upside, and then some decent support around the 1427 level, extending down to around the 1422, and below there down to the round number 1400.